Hi, good morning. Chandra Shrikant here from ET Now. I have questions for the three of you. I'll start with Vishal. Vishal, this is the second time you're cutting guidance this fiscal year. So, how are you really going to repose confidence in investors about the predictability of your earnings? Are you fairly confident that you will stick with 8 to 9% for the rest of the fiscal year, based on the demand that you're seeing? Secondly, do you see a need to relook your 2020 targets? You said that you will look at this by the end of the year. And thirdly, if you can take us through the restructuring that you just mentioned in terms of, 15 industry heads, won't that be a distraction in the current environment where, growth is becoming difficult? Praveen, just to understand, in terms of how you performed on large deal wins and what really helped you in terms of geographies, sectors in this environment. Ranga, margin expansion, but is this given that you don't have growth to support margin expansion and going by the trend, that's what it looks like in the coming quarters. So what other levers do you have to continue this margin expansion? Thank you so much.
Hey Chandra, on guidance, our belief is to ensure that there is absolutely no or as little as possible asymmetry of information between what the management sees and what we share with the market. And we have always endeavored to do that. And we operate our business in a dually volatile atmosphere. One is based on the transformation of the company based on what is going on in our industry, and the other one is what happens in the outside atmosphere. And both of these contribute to our ability to forecast over the course of a year and so forth. So based on the visibility that we have, as you see, over the course of the last quarter, we mentioned some of the client behavior related matters such as the RBS and similar some client specific things. So those have contributed to our outlook on the remainder of the year, and that is what we see right now, and that is that's what we have shared. As far as 2020, that has always been an aspiration. What is the point of an aspiration if it is not something that we can aspire to? We are sticking to that, 20 billion, 30%, $80,000 revenue per employee. Look, it is the yearly and quarterly guidance. The plans are based on what we see currently in the present atmosphere, but the future cannot simply be an increment of the present, and the future is something that we have to set a target that if we are able to execute on our transformation, then what is the number that we should aspire to, and that is the number. So we are sticking to that. And in terms of the organization, we operate by verticals. Our go-to-market is based on industries, and being able to deliver in terms of both the renew and the new, not only our renew and our new, but also our clients' renew and new. And that we need a sharp focus, accountability, and agility in being able to get there. And therefore, we have organized under the leadership of our three sales presidents, Sandeep, Mohit, and Rajesh. We must keep in mind that beyond their responsibilities in verticals, they also carry global responsibilities. For example, Mohit runs all the sales operations for the company globally. So all the operational aspects of sales are his, not only in the vertical areas that he's directly responsible for. Similarly, Sandeep is responsible for bringing all the new services and software across the company, and Rajesh is responsible for ensuring that the strategy and consulting part of the work that we do is global in nature. And so they will continue to be responsible for those global functions as well as their industries. But now with the 15 or 16, Praveen, what is the exact number? Is it 15 or 16?
Unlucky 13.
It's 13. 13. With the industry heads, we will achieve that accountability and that agility. So I think that will go hand in hand with the extremely, with the amazing job that Ravi is doing, running a defragmented delivery organization where we can bring the power of automation as well as grassroots innovation to bear, and you see the results that is delivering.
Yeah, just to add on sales restructuring. In delivery also under Ravi, we already have about 13 leaders. And we did this about 18 months back, and it has worked well. And so we have now extended it on the sales side, on the market side. Now coming back to the large deals, we won 6 deals. Two of them with committed revenues totaling to about $138 million and 4 framework deals, $1,069,000,000. So total of about slightly over $1.2 billion. This as compared to about $880 million we did in previous quarter. So it's that deal win continues to be good. The pipeline continues to be healthy. In terms of the overall commentary on the services and the segments, overall it has been a broad-based growth. We had, from a geography perspective, we had good growth in the rest of the world. India, we had a good growth. It was one-off on the back of a GST project. Then on Europe, on a reported basis, it was just about 1.1% quarter-on-quarter growth, but on a constant currency, when almost close to in-phase growth. Only Americas was a slightly moderate growth. It was about 2.2% or so. But barring that, I think by and large, growth has been uniform across sectors. And from a services perspective, we continue to see our core IT services doing extremely well. They have grown much faster than the organization. Even last quarter, they did that. We had a 4.6% reported growth on the core IT services side, led by good growth in engineering, testing services, infrastructure management services, and application development. On the industry side, we have seen good growth in ECS, over 6% quarter-on-quarter growth. All three segments, energy, utilities, as well as telecom, have done extremely well. Financial services, despite all the challenges, we have seen good growth, both financial services as well as insurance. Manufacturing has been moderate. Retail has been just average, just marginal growth. But having said that, while from a growth perspective, while on an incremental revenue perspective, we have done well on retail. And in terms of the market share capture, I think we have done reasonably well capturing market share in this space from our competition as well. Overall, net, I think it has been a fairly decent growth across segments, across service lines.
Hi, I think Q2 on the margin front, we've expanded the margins by 80 basis points. And I think I would certainly attribute this to our very sharp focus over the last couple of quarters on the operational efficiency path we've been focusing on. As Vishal said, utilization, and we've always said that, look, it used to be in late 70s as recent as about, FY15. And we said, look, we'll focus it to keep it consistently about 80%. And last 6 quarters, it has been about 80%, and this quarter, 82.5. And the other indicator, as you know, is the on-site effort mix. It used to be 29.9 last quarter, and we have seen that declining to 29.7, which is again a positive movement for us. Of course, the on-site employee cost optimization continues. That has helped us. And more importantly, even the subcontractor expenses, which used to be 6.3% of revenue in Q3 of last year, we said we would bring it down, moderate it without hurting the growth. So it has come down to 5.6 and 5.4 now. So overall, I think in this quarter, there has been a continuation of our sharp focus on operational efficiency, which helped us in improving the margins by 80 basis points. And as you rightly pointed, margin is an outcome of 3 key pieces. One, of course, is the revenue growth, and the second one is the pricing, and the third one is to what extent the pricing declines we could offset through operational efficiency indicators, whether it is subcon, whether it is utilization, whether it is on-site mix, whether it is on-site role ratios, and so on and so forth, which are all internal factors that we have, which we do believe we have those levers. First half, if you look at, for the first half, we had average of 24.5%. And if you look at the last couple of years, we have always said that, look, our medium-term focus on operating margin is 24 to 26%. And in a fiscal 16, we ended up at exactly midpoint, 25%. In the first half of this year, we have had 24.5. So given the revenue trajectory for the balance of the year, we expect it to be in the range of 24 to 25. So that's what, of course, having said that, our focus, the operational efficiency levers we have consistently demonstrated over the last couple of quarters, we'll continue to focus on that. There could be quarter-to-quarter volatility, but the trajectory of those operational efficiency indicators are extremely important for us. And we do believe that we'll leverage them, including some on-site optimization and so on and so forth.
Hi, this is Sajid here from Bloomberg Quint. Vishal, I just want you to elaborate a little more on the guidance part because you had 10 guidance in Q1. You brought it down to 7.5 to 8.5 in dollar terms. So there's a 300 basis points dip on the lower band. And is it entirely because of RBS or there are other headwinds which is forcing you to bring it down by 300 basis points because the market was looking at somewhere around 150 to 200 basis points?